Spider continues to find attraction here today after yesterday's shenanigan move. When we woke up in the morning yesterday on Wednesday, market opened pretty much flat and it dropped. It dropped so fast that everyone, they're panicking, freaking out, hitting that stop, exiting in panic. And I think that was the purpose of Wednesday morning's shenanigan price action here. But what really happened was, though, that gap was filled on the first hour, but once that gap was filled, we see that level acted as support. And I think, maybe a lot of people thought that maybe the gap got filled, so maybe temporarily it might act as support, but I don't think anybody expected to see a full-blown reversal after the first hour, second hour, third hour, fourth hour, fifth hour, sixth hour. We pretty much went vertical. So I think after that panic selling occurred on the first hour yesterday, people are buying back in and the bears are covering and pending all the short sellers. And I think that's what really caused this sort of very much snapback rally. They reclaimed all of the moving averages. As you can see, that all happened on the third hour. Once we got above all of the moving averages and this neckline right here, 548, 549 or so, and that's when the sentiment has shifted, right? So we can look at this as a double bottom base. That's the neckline, broke above the neckline, reclaimed all of the moving averages. That's a micro term, that's a mid-term, that's short-term, that's long-term there.
Perfect.
And today we've seen a little bit of follow-through right here. As you can see, that oscillator, however, is hitting that extreme overbought zone. But this market, the way this market has been moving, that oscillator hitting the extreme overbought zone is not necessarily a bearish signal in this market, because this market, when the Ponzi leeches are coming in and buying the highs, it doesn't matter if the oscillator is extreme overbought. They can flatten out that oscillator, as you can see right here, for days.
Perfect.
They can even gap it up.
Perfect.
Despite the fact that we're at extreme overbought, and they can keep pushing. When we have that microterm is that aqua squiggly line. If you follow that microterm moving average here, this was back in middle of August. As you can see, that's when the microterm was reclaimed. That microterm was never once breached for like 2 weeks straight. As you can see right here, that microterm, you follow that microterm, it wasn't breached until near the all-time high, and things got a bit more hectic once that microterm was breached, sort of like mid to late August. And then market moved sideways, and finally when we lost the short term, which is green, that thing tanked. So now we're pretty much recycling this. We got that oscillator fully reset. Remember, it was an extreme overbought, and then it got back down to extreme oversold. So market, the oscillator fully reset, similar to here. And then now that oscillator is going back to the extreme overbought zone again, and that's a bullish, I think, in this case, in this environment. Going into tomorrow and early next week, what we have to look for is this down gap. Remember last time when this down gap, that all-time high down gap, the 565 level, I've been preaching about the boss bear command center. We talked about this entire last couple weeks. This down gap was not fully filled. Remember this? When that wasn't fully filled, when we saw another secondary down gap, things got extremely hectic. So this down gap, 560 and 565, must be filled. If this down gap does not get filled, we're gonna see some more shenanigans.